Chinese central bank has finally taken steps to boost growth. The People's Bank of China cut its cash reserve ratio, the CRR, over the weekend. Many see this as one of the many steps the Chinese central bank will take to ramp up the world's second largest economy. Arnold Gay at Reuters with the details.
Asian shares edged lower Monday after China's move to loosen monetary policy failed to outweigh news that Greece had again failed to form a new government. China's central bank flooded an extra $64 billion into the market by cutting the reserve requirement ratio, but the move highlighted concerns over the health of the Chinese economy. Stocks inched deeper into territory not seen since mid-January, with the materials sector leading losses.
I think it says something about how weak the numbers were late last week. Of course, we had the trade data, which was particularly soft, and we were expecting industrial production on the back of that to be weak. Indeed, that's what it was. So good to see that Chinese policymakers are taking an immediate step to respond to the weaker data, but I guess that also, introduces some caution that perhaps the outrun is looking softer than was expected.
Bennett says China will continue to tweak monetary policy and allow the yuan to strengthen.
Our view for Chinese policy this year is that this policy fine-tuning, which has been talked about so often, will involve further cuts in the RRR, an explicit cut in interest rate, but also maintaining an appreciation of the currency. That will help to balance that fine-tuning. It will obviously help in this more import-heavy growth model that we're looking forward to over the next few years.